Well, the big news this week has been the court decisions relating to directors of finance companies again, and the likely ongoing prosecution of more directors by various government agencies. The length of the sentences, the fairness of the sentences, of course, gets plenty of comments. But at the sort of real root of the problem is the depth of governance experience, the quality of the directors, and whether the market really has any interest in this. So let me explain. Some research that we've been doing recently has looked at various governance attributes and how that impacts on the financial performance of companies. We've also done similar work for not-for-profit organisations and state sector organisations. So if you think, on the one hand you have the performance of the organisation, and then you say, well, are there certain things about the types of directors you have that will enhance the performance of the organisation? So it's quantitative research. Now, we've done quite a lot of that recently, as I said, and we find a range of what I think are really quite interesting things showing up as positively related to enhanced performance. What we also discover is that these things are not signalled to the marketplace. So investors either don't care or have no awareness of them, or are not being told. And so there's a whole communication strategy that is not being developed around the governance styles and governance attributes of companies. Perhaps who the directors are is all going to be a foregone conclusion. Right? We've seen what happened. We have foregone conclusions. The finance company failures may be the end of it, or maybe we'll get more of the same into the future. It is essential that investors start to show some real interest in the quality of the directors on their boards, and that just nomination by the chairperson of the next director not be taken for granted. So this means that the trustee for bond and debenture holders needs to show an interest, banks need to show an interest, main block holder shareholders need to show an interest, financial journalists need to show an interest. And I think the problem we confront is there is a very low level of literacy concerning governance and what is and is not important, and how that will impact on financial performance. So the closing thought is, we don't just need normative statements about directors should do this, directors should do that. What we need to know is, when directors have these attributes, can it be shown that this is positively related to enhanced performance? That type of information needs to be much more widely disseminated and discussed.